Mark, looking at these markets right now, today notwithstanding, it has this oddity here of rising in the face of stunning jobless claims news. 6.6 million Americans, 10 million over the last 2 weeks that have filed for unemployment benefits. But it's holding up relatively well today. I usually say it's because of the course, good news or bad news on the course of the coronavirus cases we hear. What does it for you? What do you look at to sort of get a gauge of where we're going?
I'm looking at the duration of this and how long this works, and hopefully behind the scenes, all the rumors we hear about vaccines or treatments are going to reduce this duration of this. It's inevitable that I believe that we get out of this, and that's what drives people to still invest. Because I think if you're looking at a 3 to 5 year time horizon, you're going to look back today and say this turned out to be a very good time to invest. So I think money on the sidelines is looking for valuations. We might see them either in technology or communications. The work from home space has been popular. So people are looking for what they perceive as values and bargains if they're a long-term investor, and they may get rewarded for that.
What do you think of that, Mark?
Well, I think economically it will be rocky for weeks and months. These things are going to take a long time to unwind. It's not just, are we going to be comfortable sitting in a restaurant? I was a corporate banker for a number of years, and I can tell you right now that new business development has stopped at every bank in the country. It's sort of going along like triage. They're looking at protecting from loan losses. They're building workout shops, and they're either accommodating creditor requests. They're reviewing collateral which is impaired, and they're realizing that they're not going to collect interest for a few months. You couple that with how the stock market has impacted the asset management fees of banks, that M&A activity has slowed, and and this flat yield curve, which was already hurting banks, you're not going to have a robust, immediate economic turnaround. I do believe it will happen, but for anybody who thinks that it's going to be 2 or 3 months, I say we need to really look at 2 or 3 years as a more realistic opportunity to turn this giant ship around, because banks are going to be mired in trouble, and they are the economic engine and lifeblood for financial recovery.
2 or 3 years?
Well, to reach where we were, to get back to close to 30,000 on the Dow, I don't see that happening in 12 months. I could see another 20% bump, and that's why you keep people invested in this. We had 20% bump last week. So that can happen again, but that's only going to take us to 26,000. So if you're still going to be another 20%, the way the math works, on the way down is a lot more benign. You need a bigger percentage gain to make up for what was almost a 30% hit. And then this last week, we were down 6%. So we're going to see more of that. And before we get back to Dow 30,000, you're going to have to look at a period of years and not just months.